So just think about that. We basically cut out 80% of the activity in the space of just under 2 years. That's a tremendous drop in the industry environment. And that has profound implications for the entire supply chain that feeds into the global fracking or the US industry. Because as Geoff pointed out, essentially the oil companies are essentially the source of funds and source of the engineering and technology, but the doers, the people who actually execute and drill the wells and pump the fracks, is the service industry. So the likes of Schlumberger, Halliburton, and the big drilling companies as well. And they have been hurt extremely badly. Essentially, as you go down the food chain, the pain generally gets worse as the cycle turns. So it has been very, very dramatic turnaround, but the industry has been remarkably resilient. And a lot of that is around technological innovation. And just to give some sense of scale, let's walk through some of the drivers around that underlying, if you like, productivity of the US industry. Well, the first factor is we've built a load of higher spec rigs, just more efficient rigs. And we're able to drill wells far more quickly and far more efficiently. And in the growth period, we probably have added something of the order of 2.5 incremental wells drilled per rig per year in terms of efficiency improvement. So the output per rig has gone up very dramatically. And then what have we been doing with those wells? Those wells have been much more accurately targeted within the reservoir, and we're drilling much longer horizontal sections into the productive zones of the formations. Now, if you're touching the productive formation with more well, you're going to get more oil out of that well. All right? So we're having, with those more wells per rig, we're touching more reservoir. And then the third thing we're doing is we're essentially doing bigger and more productive fracks. So we're pumping more into the well, doing a bigger frack, and the wells are releasing more productivity. And if you look at statistics around rig efficiency or oil yielded per well, really much any measure that you want to think of in terms of efficiency, and you look really across any of the major plays, be it the Permian, be it the Bakken in North Dakota or the Eagle Ford, you'll see those same trends. You'll see a trend of quite steeply rising productivity trends, right? So the question becomes, what happens as we look into the future? Can those trends continue? As we start to get some recovery in oil price, get a little bit more cash flow into the industry, and add those rigs back. And I think that our view is that we can't necessarily linear extrapolate these huge learning curves that we've had over the last few years. Essentially, we're starting to tap out the lateral lengths that we can drill. We're starting, there's maybe a little bit more we can do with the frack design and the productivity that we can yield from the frack. But again, at some point, that learning curve has to start to smooth off. I'm not saying that this completely switches off the growth wedge of US production into the future, into the global balance. No, it's going to be very, very significant. But it's not going to have the degree of rapid learning that we've seen in the years gone by.